With renewed interest in Bitcoin, many Canadians are wondering just how can they hold Bitcoin in their portfolio without, of course, the hassle of owning, well, Bitcoin. Fasten your seatbelts, folks. This is going to be a good one. Recently in the US, the SEC approved a big handful of spot Bitcoin ETFs, and this is huge when it comes to the investing feasibility of Bitcoin. Of course, there are still the naysayers, but maybe just a few less thanks to that SEC's ruling on these new ETFs. When it comes to investing in Bitcoin, the first and most obvious way you can do that is to simply buy, well, Bitcoin. In Canada, you can buy it online through Wealthsimple, ShakePay, CoinSquare, just to name a few. They will host your Bitcoin for you or provide you with an option to move it off their exchanges and into a cold wallet. The downside, of course, to holding your own Bitcoin, whether on or offline, is that it is not tax-free, and you will be susceptible to capital gains when you sell Bitcoin if you are, of course, in the green. You cannot hold Bitcoin in a registered account, thus you cannot have any form of tax protections on it. However, there is a way to gain exposure to Bitcoin in your portfolio and, more importantly, in your registered account so you can enjoy those tax protections. Join the conversation. Let me know in the comments if you are holding any Bitcoin ETFs. Your participation is, of course, well appreciated. Don't forget to like and subscribe to stay up to date on future content, and a huge thank you for that click. There are two main ways you can gain exposure to Bitcoin in your registered account. The first is with a Bitcoin ETF. And the second is via a Bitcoin adjacent stock, like a crypto mining stock. An exchange traded fund, or ETF, for Bitcoin is designed to track the price of Bitcoin. It allows you to invest in it without buying the cryptocurrency directly. These ETFs hold the actual Bitcoin, and then they divide the ownership of it into shares, which investors can then buy and sell just like they would with stocks or other ETFs. A big advantage is that there is no wallets or keys needed, just a brokerage. In addition, you don't have to worry about losing or getting your digital wallet hacked. That is a big plus for sure. There are Bitcoin that have been lost forever thanks to lost wallets. Just as that guy who's trying to get permission to dig up a landfill so he can find his computer that he threw out, not realizing all of his keys for his Bitcoin were on it. Holy banana bread. That's not a good day for that guy. Now back to those ETFs. In Canada, these spot Bitcoin ETFs are regulated, which does add more layers of security as well as some legitimacy to the asset class. There are a good variety of these ETFs with some slight variations to meet different investing needs. So let's take a look at a few of the more popular ones. Purpose Investments is one of the more popular management companies with a good selection of Bitcoin ETFs. The first Bitcoin ETF that was launched in North America was the Purpose Bitcoin ETF. Its ticker is BTCC. It is a straight up spot ETF, so it holds Bitcoin in its reserves and sells the ETFs. Its price is very, very closely linked to the price of Bitcoin. You can also get this one as BTCC.B for an unhedged to the Canadian dollar version. There's also a US dollar version, BTCC.U. And just recently, they've also added BTCC.J for a carbon offset version as well. And that one there is basically if you want to make sure your Bitcoin was mined without adding to the carbon footprint. In addition to those spot Bitcoin ETFs, they also have a covered call version of their spot Bitcoin ETF called the High Yield Purpose Bitcoin ETF with a ticker of BTCY. This one provides a very generous dividend that is made from writing options on the underlying Bitcoin. The monthly dividends are absolutely great, but you do lose a wee bit of their upside potential. That's kind of the nature of a covered call. Purpose does have higher management fees. They charge a 1% fee on most of their Bitcoin ETFs and a 1.1% fee on that covered call one. Evolve is another management company with a Bitcoin ETF. The Evolve Bitcoin ETF has a ticker of EBIT, and they are unhedged to the Canadian dollar. They do have a slightly lower management fee as well, which you may find attractive at 0.75%. There are also some ETFs by CI Galaxy, such as the CI Galaxy Bitcoin ETF with a ticker of BTCX for their regular Bitcoin ETF, BTCX.B for their unhedged version, and BTCX.U for the USD version. CI Galaxy is pretty darn popular for one reason. They've got the lowest management fee coming in at 0.40%. There are also more Bitcoin ETFs from 3iQ and 9Point, so that would be BTCQ and BITC. And of course, as we mentioned earlier, they did just approve a whole bunch of spot Bitcoin ETFs in the US. We're not really going to dive too deeply into them. However, I do want to say, if you're going to hold one of the American ones, they are ideal for your TFSA because they don't have any kind of dividends or distribution, so you don't have to worry about that, and you'll get your full tax-free status within the TFSA. You can put them in your RRSP as well, but the TFSA is a beautiful spot for those American Bitcoin spot ETFs. Now, the other option I spoke of was to invest in Bitcoin adjacent companies. These are simply companies whose businesses are closely linked to Bitcoin or the cryptocurrency sector in general. These stocks can include Bitcoin miners, technology companies specializing in blockchain, and firms providing crypto-related financial services. Bitcoin mining companies are a major part of these Bitcoin adjacent stocks. They earn Bitcoin and other cryptocurrencies by solving complex computational problems, which then rewards them with Bitcoin or other cryptocurrencies for completing a block. Hut 8 Mining Corporation has a ticker of HUT, and they are a leader in North America when it comes to Bitcoin mining, and they also have a very good reputation for their environmentally conscious mining practices. Bitfarms is another great little mining company with a ticker of BITF. In addition to them, there's also Hive Blockchain Technologies with a ticker of HIVE, and Hive actually, they do both Bitcoin and Ethereum using green mining methods, which is awesome. Beyond mining, several companies are involved in the technological aspect of Bitcoin and cryptocurrencies. Galaxy Digital Holdings has a ticker of GLXY, and they offer diversified financial services and investment management for the digital asset, crypto, and blockchain technology sector. Another one that we've heard a few times in the community is Neptune Digital Assets with a ticker of NDA. They're simply a digital asset company that also partakes in mining and staking to generate more Bitcoin and other crypto assets. So these are definitely ways to gain some crypto exposure in stock form. However, it does not need to be stated that crypto does come with a higher volatility, and that it is also a trait passed on to these ETFs and those Bitcoin adjacent stocks. The best approach with higher volatility is to check your emotions at the door. If you are the sort to panic when things drop and sell at a loss, crypto may not be your best play for sure. It is all about the long term and the rewards waiting for you on the horizon. As usual, if you are interested in any of the ETFs or stocks we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Keep the learning going. Watch my video on potential superstar stocks linked on the left, or test YouTube's recommendation skills by checking out the videos on the right. Your choice will decide the winner, and I will see you in the next video.